Look at the cash in your wallet right now. It looks the same as it did 5 years ago. It feels the same. The portraits of the presidents haven't changed, but there is a silent, invisible fire burning a hole in your pocket. And by the time you actually smell the smoke, it might be too late to save what you have built. Welcome to the reality of the 2026 money shift. Most people are walking around with a false sense of security because they see a number in their bank account that stays steady. But in the financial world, standing still is actually moving backward. Today, we are not just talking about inflation. We are talking about a fundamental shift in how wealth is preserved and why holding on to cash is the single most dangerous investment strategy you can have right now. Let's be honest with each other for a second. You have been told your whole life that cash is king, cash is safe, cash is for emergencies, and yes, having a safety net is responsible. But there is a massive difference between a safety net and a graveyard for your hard-earned labor. When you leave your money sitting in a traditional low-interest savings account, or worse, under your mattress, you are effectively volunteering to work for free for several months of every year. Think about that. You wake up early, you deal with stress, you trade your time for money, and then you park that money in a vehicle that has flat tires while the cost of living speeds away on a highway. We need to look at the math because numbers do not lie. If inflation is hovering around 3 or 4% and your bank is paying you 0.5%, you are guaranteed to lose money. It is a mathematical certainty. It is not a possibility. It is a promise of poverty. In 2026, the economic landscape has evolved. The government printing presses have been running hot for years, diluting the value of every single dollar in circulation. It's simple supply and demand. When there is more of something, it becomes less valuable. Your dollars are becoming less rare, and therefore they purchase less real-world value. This is why the rich get richer and the poor stay poor. It is not always about income, it is about allocation. Wealthy people do not hold cash, they hold assets. They hold things that benefit from the money printing. When more money floods the system, where does it go? It flows into real estate, it flows into stocks, it flows into commodities. The price of these assets goes up. If you are holding the asset, you get richer. If you are holding the cash, you simply watch the price tag of your dream life get changed to a higher number. I want you to visualize your savings not as a pile of gold coins in a vault, but as a block of ice sitting on a kitchen counter. At first, it looks solid, it looks substantial, but every second of every day it is melting, drip by drip. That is your purchasing power. That vacation you wanted to take, it now costs 20% more. That house you wanted to buy, the down payment just moved the goalpost. This is the cash trap, and the banking system loves it when you fall into this trap. They take your cash, which you are afraid to invest, and they lend it out to other people at 5, 7, or 10% interest. They make a fortune on your fear. So, if cash is trash, what is the alternative? Are we supposed to gamble everything on risky trends or volatile coins? Absolutely not. That is how you lose money even faster. The goal here is not reckless speculation, it is strategic preservation and growth. The 2026 money shift is about moving from being a saver to being an owner. You need to own a piece of the economy, not just the paper currency used to facilitate trade within it. We are going to break down exactly where smart money is moving right now. We are seeing a rotation into tangible assets and digital scarcity. We are seeing a move towards companies that have pricing power, businesses that can raise their prices when inflation hits without losing customers. These are the lifeboats in the ocean of devaluing currency. But before we get into the specific assets you need to be looking at, you have to break the psychological addiction to the safety of a high bank balance. It feels good to see a lot of zeros, I know, but if those zeros can't buy you freedom, what are they really worth?
So where does the money go? If we are emptying the piggy bank, we need a better place to put the coins. The first pillar of the 2026 money shift is what I call owning the machine. This refers to the stock market, but not in the way day traders use it. We are not trying to guess which line goes up tomorrow. We are looking to own pieces of companies that produce the goods people need to survive. When inflation drives up the price of toothpaste, cereal, and gas, the companies selling those things make more revenue. By owning shares in broad market index funds or high-quality dividend-paying companies, you're essentially positioning yourself on the receiving end of those price hikes. Instead of paying the inflation tax, you are collecting the inflation profit. It turns the enemy into your ally. The second pillar is tangible value. This often means real estate. Now, I can hear you saying, I don't have $500,000 to buy an apartment complex. That is a fair point. But in today's market, you don't need to be a landlord to own real estate. You have real estate investment trusts, or REITs. These are companies that own the buildings, hospitals, warehouses, apartment blocks, and they are required by law to pay out the majority of their taxable income to shareholders like you. It is a way to get the benefits of real estate appreciation and rent collection without ever having to fix a leaky toilet at 2 in the morning. It's about liquidity and access. Then we have the conversation about store of value. This is where things get interesting. For thousands of years, this was gold. When empires fell and currencies collapsed, gold remained. It is still a valid hedge. But we are also seeing the undeniable rise of digital scarcity. Whether you're a believer in cryptocurrency or not, the financial world has accepted it as an asset class. Allocating a small, responsible percentage of your portfolio to assets that cannot be printed by a central bank acts as insurance. It's your hedge against the system making a mistake. The key here isn't to go all in on one thing, it is to have a diversified shield against the devaluing dollar. Now, let's talk about the strategy to execute this without losing your mind. The biggest mistake people make is thinking they need to time the market. They wait for a crash that never comes, or they sell everything the moment the news gets scary. The solution is boring, effective, and ruthless: dollar cost averaging. You set up an automatic transfer from your checking account to your investment accounts. It happens every single payday. You don't look at it, you don't touch it, you don't make emotional decisions about it. By buying consistently, you buy more shares when prices are low and fewer when prices are high. You average out your cost and remove human error from the equation. But what about your emergency fund? Should that be invested too? No, this is the only exception where cash is acceptable. Keep 3 to 6 months of expenses in a high-yield savings account. Notice I said high yield. Do not leave it in a checking account paying 0%. There are banks right now fighting for your deposits, offering 4 or 5%. It won't make you rich, but it will stop the bleeding while keeping that money liquid for emergencies. That is the only job of cash: liquidity, not growth. The 2026 money shift isn't just about moving numbers on a screen. It is a shift in mindset. It is realizing that the old rules, go to school, get a job, save cash, are the rules for a game that has finished. The new game requires you to be an investor first and a saver second. It requires you to understand that your labor is finite, but the growth of the economy is theoretically infinite. You want to attach your financial boat to the rising tide, not anchor it to the sinking sand. Start small if you have to. $50 a week into an index fund is infinitely better than zero. The most expensive thing you can do right now is nothing. The clock is ticking and inflation never sleeps. Take control of your financial future today, because no one is coming to save you. You have to save yourself, and the best time to start is right now.